So we have a deadline in June of 2025. Well, it's June of every year. It's called your second estimated tax payment. So what is an estimated tax payment? Those who are employees, well, they have their withholding done in their paycheck and they get it at the end of the year with a W-2. But that's not the case for small business owners and gig economy and freelance type workers. They have to pay their taxes voluntarily every quarter through estimated tax payments. The United States tax system is a pay-as-you-go system, which means you can't just pay your tax bill at the end of the year when you file your taxes. You have to pay it throughout the year when you have income. So there's where your quarterly estimated tax payments are due. First one is due on April 15th. The second one is actually due only 2 months later on June 15th. It covers the income from April 1st to May 31st. Kind of odd, it's not a quarter, but that's how the IRS rules work. And that's how they work today. There's laws or bills in place right now that are going to actually look to change that to make it a true quarter. But that's how it is right now. So why do you make estimated tax payments? Well, one, it's a pay-as-you-go system. So it's the rule. And if you don't follow the rule, obviously there are penalties. Now, the first penalty is the estimated tax penalty that you can get. If you don't make those quarterly payments on time associated with the income that you make at the end of the year when you file your tax return, you could get this penalty, an estimated tax penalty. It's basically the foregone interest. Now, the interest rate the IRS charges right now is 7% on underpayment. So this could be a considerable penalty. The second reason why you want to make an estimated tax penalty is to avoid a very large tax bill at the end of the year, right? Surprise, I go ahead and I owe. So if you pay throughout the year, obviously you avoid a penalty, but you avoid a tax bill. How much do you know to pay? How much do I have to go pay? Well, you really have to estimate your income throughout the year and know what your tax liability is. That can be kind of tricky. If you want a safe harbor, just take last year's tax, 100% of that tax, and then divide that by 4, what you had last year. Say you had $10,000. So that means of total tax. That means your withholding and your estimated tax payments need to be $2,500 per quarter. Okay? Makes sense? So you need to make your estimated tax payments based upon last year's. 100% of last year's will go ahead and avoid the estimated tax penalty. However, if you do have an increase in income and you don't account for that, you could in fact owe. So it may not solve the owing portion of it. So if you have to pay estimated tax payments every quarter, how do you go ahead and do that? Well, there's basically 3 options, but the best option I like to use are the electronic options. The 2 electronic options are using the IRS Direct Pay right on irs.gov, which allows you to make a payment right there without having to have all the technical details of producing all the paper and such. You can do it right there on IRS Direct Pay. If you are an IRS online account user, that is, you have an ID.me, you've authenticated and got an ID.me account, you can use your online account and make payments there also. You can actually schedule payments there also. Lastly, if you want to go the paper method and you're a 1040 filer, just print out a 1040 ES on irs.gov, fill it out, attach a check, and go ahead and send it into the IRS right in the address for the 1040 ES voucher out there. It's as simple as that. It will get posted to your IRS account. If you want to know that it's posted to your IRS account, go ahead and look at your IRS account transcript or go ahead and look at your online account. You can go ahead and see the payment actually posting there on your account. Very easy to make estimated tax payments. Need to make them every quarter. Best way to do it is electronic method.